Hey everyone, welcome back to another episode. Today we are doing a deal analysis on, I think, the lowest price house hack we've ever discussed on this podcast, along with the lowest amount of cash to close for a house hacking client as well. So my co-host today is Stacy Rosansky, who is actually the agent on this deal. Stacy, how's it going?
Good, Chris. How are you?
Doing really good. So give us the high level, the overview of this deal, because this is an interesting one and definitely a much lower price point than we talk about.
Yeah. So we had a client come that didn't have a very big budget. And so we took on that challenge to work with him to see what we could find. And we ended up finding a 2-bedroom condo that made sense as a house hack and a future rental.
And he also closed with a down payment assistance as well, which helped really lower the cash to close, right?
Yeah, he did not have to come with much cash out of pocket for this deal. He was able to use FHA financing as well as down payment assistance.
Okay, so what was, I know you said he was, had a limited budget. What was the high level criteria for what he was looking for, hoping to achieve? What were his goals?
Yeah, so for this was his first property, and we had to stay under $200,000. And he was just looking for what that could afford him in the city of Denver. So we were only looking at condos. That limited us, and really only 2-bedroom or less condos.
Okay. And he was open like the whole metro area?
Yeah, he was open to the whole metro area.
Okay. So what did you guys end up getting under contract?
So we ended up finding a 2-bedroom, 1-bath, actually in Denver, kind of east side of Denver, it was listed at $169,900.
And why did you guys like it? Obviously, besides from the price point.
It's in a condo complex that we were very familiar with. Our team has bought several condos in this complex, so we knew it had a good HOA. It had, it has off-street parking. It has the ability to add laundry in the unit. So a lot of things that we were looking for were in this condo. And it was a good opportunity for us because it had come back on the market. So it was previously under contract and that fell out. And so we jumped right on it.
Okay. So kind of going to that. So had you guys put an offer in initially and lost out?
No, we did not. It was under contract, I think, before we had started looking. So. Okay.
And do you know why it fell out of contract? Or just typical...
Yeah, I think it was inspection or something they couldn't agree on.
Okay. And then what was the offer like? So I know it was listed around $169,000. Did you guys go in around the same price? Like, what were like the general terms and speed you have to do to win this property?
Yeah, we went straight in right at list price. And we were able to... we were working with Joe, so we did very streamlined lending, 30-day close. And we didn't do a limited inspection, but the listing agent was able to provide us with the previous inspection. So that helped us kind of decide how we wanted to move forward, having that information up front.
Okay. And were there anything major in the inspection report?
The only thing on the inspection report was that the HVAC, there was some trouble with that. And so we just brought in our HVAC inspector, specialized, and he checked it over and everything was fine.
Oh, that was it?
Yeah.
Okay. And then in terms of, so it sounds like there's no inspection time since you guys had the report and really was nothing major once you actually dug into it. Now, I know you said you were going to Joe on the financing side here. So this was an FHA down payment assistance program. And we've talked about this other podcasts that a lot of times some condo complexes, they are not FHA approved for a variety of reasons. Sometimes just too much paperwork. Other times there's other issues. What was the situation like with this FHA purchase in this complex?
Yeah, so this is a complex that has a lot of investors as well. So they are FHA approved, but there's limitations on how many investors versus homeowners, and that's kind of like a sliding scale. So it changes depending on what's been bought and sold in the complex. So we didn't know for sure going in if we could get it, but we ended up getting it, which was awesome. And Joe led us through that process, and it was really smooth.
Okay. And did this one require the FHA spot approval?
Yeah, it was a spot approval,
okay.
I believe.
So Yeah, so that means and that was that extra check to make sure that FHA could go through on there, right?
Right.
Yeah.
That too many investors hadn't bought in the last week or something like that.
Good. And obviously it came in well.
Yeah.
And then other than that, I mean, no inspection items, nothing else really to talk about during the contract process, right?
No, the appraisal came in at value. It was really smooth going. So we were really happy with this one.
All right. So let's plug into the rental analysis here. And for we got Joe's spreadsheet up here. So we've got it in here at 3.5%. Mortgage insurance is monthly paid since it's FHA. Purchase price at just under at $169. And all together after down payment, closing costs, down payment assistant, he was all in for what, mid $9,000?
Yeah,
you said?
under $10,000.
Yeah, under $10,000, which is, I mean, the only other ones I've seen under $10,000 has been VA loans because they are 0% down plus the closing cost. But this is the first time I've ever seen a non-VA below $10,000. So
yeah,
this is
pretty
great.
awesome.
Yeah. So he was probably, I mean, the investor had to be thrilled, right?
Yeah, very much.
So interest rate at 3%, 30-year mortgage. And these numbers are for when he moves out. He should get $1,400 a month in rent once he moves out. But while he's living there, do you know what his plan is? Is he getting a roommate?
Yeah, so he was actually going to be, his brother was moving to town, so he was going to rent to his brother.
Okay.
But again, he could just do a typical room rental, get around $700 a month for that. So,
because I mean, fair market rent for a room over there is going to be $750 a month, right, for a room over there?
I think so, yeah.
Yeah. And so even if he was living there, that's going to,
offset his
cost a big time. So he moves out $1,400 a month. We have our typical assumptions plugged into there. And he will not pay for property management when he moves out. HOA is just under $300 a month. Taxes are about $900. Insurance on a condo, $400. And then really no other expenses because it's an HOA property. So moving to the analysis here, this is what surprised me so much is that when he moves out at 3.5% down, this is actually cash flow positive at $1,900 for the year.
With an HOA too.
Yeah. So what that comes out to be is a 20% cash on cash return. And it's just so high because, I mean, number one, it's positive cash flow. But since he put in $9,000, it's a big percent of your total money down. And the total return on here, if you look at all four quadrants, is 167%. Now, appreciation makes up like 91% of that return. But debt paydowns, 36%. Depreciation's like 18%, which you can start taking advantage of once he moves out of there. But he's getting such high percent returns because he has such little money down. And that's like one of the the keys to understanding these returns here. Does that mean the property appreciated 91%, Stacy?
No.
No. So, exactly. But here's the crazy thing. So in the first year, and this is just as assuming as a full rental property, cash flow is about $1,900 a year. Appreciation of the property is about $8,500. So it goes from $169 to $176 in value. Debt pay down's like $3,300 a year, and depreciation is about $1,600 a month, or $1,600 a year. So that's $15,000 annual. I mean, and that's for $15,000 in total return over $9,000 down. That's great.
Pretty amazing.
Yeah. So yeah, this was just a great deal we wanted to cover because the numbers are phenomenal. It's a low price point. It's a unique loan program, and I mean, the market conditions were, this was a couple months ago. They were tough back then. They're tough now, but you got the deal done.
We got in at the right time. A couple of things I did want to mention is that he did use down payment assistance on this, so that does need to be paid back if he wants to use the property as a rental. So his plan is to do that over the course of the next year to 18 months while he's saving money because he's renting out his spare bedroom. He's going to have enough saved up to hopefully be able to pay that back.
Great.
And then the other thing is just looking at this, he was paying, I think, $900 or $1,000 a month in rent, and his mortgage now is a little bit higher than that, about $1,200 with all in. And so again, renting out a room, he's already decreased what he was paying in rent by almost half.
So is his plan to do this and then once it's paid off and saved up, go out there and repeat it again?
Exactly.
Yeah, I mean that's, I mean, good for him. And this is, I mean, these numbers, they work. So, yeah, if you guys want to get creative out there, we know the market's tough, but you're able to still go out there and get good deals done that make sense in the big picture of your investment profile and also just, what we have going right now in the Denver market as well. Stacy, any final thoughts?
Just that house hacking is creative. We are looking for deals in everywhere we can. So it's not always the 5-bedroom house that you are renting out every room, that you can do it with a 2-bedroom condo.
Great. Stacy, thanks so much.
Thanks, Chris.